So a good broker is going to actually go through and figure out what risk exists. And what am I talking about? Well, what about your contracts? Who takes on the risk if there's a cyber breach? Is it you? Is it your customers? Is it one of those large cloud hosted platforms? And the answer on those is almost always no. You're transferring the function of hosting your data, but you maintain the risk. And many people find that as a surprise. But when you can push it off contractually, when you have multi-factor authentication or endpoint detection, when you're training your employees, which is another risk we should talk about, not just doing things on purpose, but making mistakes. Oh yeah, that could be my FedEx order. Oh yeah, I will change the CEO's bank account number. These are all things that if you prevent, you get a better premium and better terms.
Hey folks, thanks again for joining me here on the Cashflow Chronicles Open Forum. I had an industry peer, Steve Carey, join me on the latest edition. We talked about cyber insurance. What exactly is included in a policy, what isn't? And overall, how can you manage your overall business from a cybersecurity standpoint? It was super helpful because I had Brad Metzger on as well, who is a veteran banker, to bring in the perspective of how a bank analyzes cyber. I think it's a good listen. Hope you guys enjoy. Hey, Steve, I appreciate you joining, man. So I think there's a lot of things going on in the marketplace when it comes to cyber insurance.
Yeah.
As I'm sure you know, who hasn't gotten hacked these days from whether it be Target or even Best Buy. So kind of interesting to see kind of you as a well-established insurance professional. What are some of the things you're seeing with cyber insurance right now?
Yeah, it's a broad question. I like it. So we always say you've either been hacked or you don't know you got hacked yet. We're seeing 3, 4, and many weeks 5 claims a week coming into our agency alone. And it's going everywhere. And so we talk about the large businesses, and obviously Target, I think, for whatever reason, caught the media's attention. There's this huge thing about how it came through an HVAC contractor, but they're attacking these small and mid-market businesses too, and maybe at an even greater rate.
I think that's a really, really good point, and happy to have you on, Brad, because as a lender, I'm sure you're seeing a lot of clients that are in the smaller sector that get affected by cyber hacks, and they just come to you, I'm assuming, for certain perspectives, and sometimes it's too late.
Right. So I think the biggest thing you got to remind yourself is, why are they getting hacked? They want the money, where it's at the bank, right?
Yeah, I mean, I think that's the biggest thing, and I think you can speak to this too. We're both in the insurance world. Well, hey, I have an insurance policy. I should be covered. And I can speak to just, I think I introduced the two of you together. There's so many factors of cyber insurance, and how many of those claims have come back less than ideal, or maybe you come into a new client, you're like, whoa, let's analyze your policy, what you think versus reality.
Yeah, I love that you're bringing that up. So a lot of people say, yes, I get it, I need cyber. And so they add a cyber endorsement onto their package policy. So give them a $25,000 of forensic coverage, which goes in a second, right? As opposed to a standalone cyber policy, which does more, but still can be changed in so many ways, and oftentimes isn't. I think taking it back a step, though, is as an insured, so as a company, the understanding of insurance needs to be that insurance is taking risk from your balance sheet that you're holding today and pushing it off on somebody else for a premium. So you pay a charge to put your risk somewhere else. And at times it doesn't make sense to. It makes time to hold on to that risk. And at times it makes sense to get rid of it. And so I don't find many CFOs or CEOs that are understanding that's how it works, and choosing deductibles that make sense for their organization, sublimits that make sense, and even looking at alternative ways of handling that risk.
You know, and that was the next question I was going to ask you, as far as the sublimit, first party versus third party variable. I like to think about it from a trade credit insurance standpoint. Well, my AR is covered. It's like, that's like a small section of a business interruption variable.
It's huge.
And like, there's many variables in the realm of insurance, and this is such a big factor right now. I commonly, in conversations, if you're not hacked, you're not a business.
Right.
And it's a very unfortunate reality, I feel
Yeah.
like, and I'm sure you can speak to that, can't you?
Yeah, you see a lot of different size companies that require a policy where you think they would require it. We were able to have a good conversation about an instance where I had one happen, right? And if you have a fraud case happen, it could be 10 grand, sure. Some companies can digest some of that, but
Sure.
yeah, theirs was $1 million. Can your company control that? Can you digest $1 million? That's where I think where we started to have the conversation of, at what point do you start having that conversation about when you should have insurance?
Yeah.
Well, and I think too, you think about with insurance protocols, there's like a due diligence, negligence factor, whether it be multi-factor authentication, endpoint monitoring.
Yeah.
Having a managed IT service that maybe can help prevent that as well.
Yeah.
But I think to both of your points, a managed IT provider can say we have a cyber variable, but unfortunately they can only do so much. I think we can agree.
Yeah.
With that coming into play. Do you ever come across that often?
Yeah, so I wrote my first cyber insurance policy about 9 years ago, which doesn't feel that long ago, but it really was, especially in terms of cyber insurance. And the underwriter was excited I called because nobody was buying cyber insurance. They asked me for the website of the company and how many employees they had. And this was an organization that had a ton of HIPAA information. They had a lot of secure data. Their controls were loose. And I gave the information to the underwriter and they said, how much do you want me to price it at? And they priced it very competitively. I still can't believe we sold it. And that's how it started because the actuaries didn't know what they didn't know. And so it was almost the Wild West out there. It's changed now where if you don't have multi-factor authentication as of 2 or 3 years ago, you might be able to get a policy, but the terms are going to be questionable. It's going to be really expensive.
So we've talked about this before. Hey, I have insurance with my company, property, casualty, or
Yeah.
hey, we happen to have a cyber arm. We've talked about how that's a good or bad thing, right? So
Yeah.
is there an area that's more of a specialty to it with or they say, oh yeah, by the way, we do it on the side as well. Can you kind of comment about
Yeah.
on that?
Yeah. So one thing we believe in, and by we I mean the company, and I've on 100%, is it's impossible to broker property insurance during the day and cyber at night and be really good at it. So behind every guy or lady like me, there's brokers who specialize in these coverages, and we built out a cyber division many years ago where that's all they do. So they know what the underwriters are thinking, how the underwriters are pricing, how the underwriters are choosing the terms, and we'll even go to London where a lot of these policies are written out of and negotiate terms on behalf of our clients. And when you talk about what makes an account good, what makes an account bad, there's these old school Accord forms you have to fill out for insurance, and they give you basic information, but they don't really tell what risk you're asking the underwriter to place this massive bet on, right? An underwriter's saying, let's say you have $1 million limit, which these days is rather low, but say you have $1 million limit and you're paying $10,000 to $12,000 per year for your cyber coverage. You're giving somebody $12,000 a year to take $1 million off your balance sheet. How do you make them comfortable with that and feel like it's the best $10,000 to $12,000 they can bet?
Yeah, because they're inheriting that risk. So within the triggers of a policy, because I have cyber, we're good to go.
Yeah.
I think there's a number of factors that can come into an actual policy. Is there like a way you can break down what a good policy is versus a bad policy? And I know it's general insurance, but generally speaking, the fine details of insurance are really critical.
Yeah, great question. Again, very broad, but I think the best thing you can do is go through a process where you feel comfortable in it, right? So there's variables, and there's actuaries who are really good at math and really smart, make a lot of money to figure out the math behind premiums. With that said, we know your premium is simply a function of the risk that you bring to the insurance company. So a good broker is going to actually go through and figure out what risk exists. And what am I talking about? Well, what about your contracts? Who takes on the risk if there's a cyber breach? Is it you? Is it your customers? Is it one of those large cloud hosted platforms? And the answer on those is almost always no. You're transferring the function of hosting your data, but you maintain the risk. And many people find that as a surprise. But when you can push it off contractually, when you have multi-factor authentication or endpoint detection, when you're training your employees, which is another risk we should talk about, not just doing things on purpose, but making mistakes. Oh yeah, that could be my FedEx order. Oh yeah, I will change the CEO's bank account number. These are all things that if you prevent, you get a better premium and better terms.
One of the things too was premiums. So what are some components that can benefit or reducing a premium or may increase, whether it be you have existing processes or the industry that they're in?
Great question. So both of those things definitely impact, I'll say, but most important is that information making it to the underwriter's full authenticity, right? So if you have all the right processes in place, but your broker doesn't know, or even worse, which people are busy, it's a wild world out there, we're all trying to figure things out. If they're not telling that story, make sure it makes it to the underwriter, then it doesn't matter. So how is your story being told to the underwriter? Again, multi-factor authentication, endpoint detection, and then we know most carriers are using a system called BitSight. And I think I've talked to you guys about this before. It's a platform that is non-disruptive. It's not a pen test. It's not a bunch of white hats getting into your computer and hacking. And it's literally looking through the front doors, looking through the windows, and seeing how secure you are from the outside, from looking at your data. That's the test they run. So as a brokerage, one thing we've done is rolled that out where we run that on our prospects and on our clients, bring the results back to them, allow them to fix it, and then we bring it out to the carriers. So again, it goes, how do we remove risk any way other than insurance? Insurance is an expensive way to remove risk off your balance sheet. Let's look at cost neutral ways.
I think that's a really good point because as providers, sometimes it's a fit, sometimes it isn't.
Sure.
But being proactive, hey, I'm here to at least, let's do an audit of your current processes and seeing if there's a gap in your coverage. I think that's your due diligence as an insurance provider. It's like, hey, this is a potential gap. We should review this. If not, it's on you. I guess from a bank standpoint, Brad, what are some of the benefits that you see with a cybersecurity policy, whether it be pros or cons?
Sure. So I think going back 9 years, right? I don't really think cyber was really on the radar of, oh, this is a problem. I think as we've evolved through this, especially to today, that 9-year period, a lot of the times if there was fraud, the banks were taking the risk on that. So we're sorry about that, and they would take it. The banks have now kind of pivoted to the point where it's like, no, this was clearly a customer issue. And we've been pushing it back onto the customer. So at that point now, it's really that insurance is coming into play. I historically have not had to talk to the customer. And it's hard to do that, as we like to kind of call on a prospect call, the first date, right? You're not going to be asking, hey, have you been hacked before?
Well, that was a fun conversation.
Right, so it's not a good way to do it. Maybe it's the second or third conversation as you're talking with them. But it's now, because it's more common, because they're exposed. My biggest thing is if a customer can avoid wires, please do, right? ACHs, banks, because it's been between banks, we have the ability to pull back. On a wire, very narrow window, and you got to work with that other bank real quick, and if nobody's caught it, one of the cases I had, 45 minutes, money was gone. It's that quick.
They move fast. They're excited and they take it and run, right?
Mm-hmm.
Yeah.
What's a common scenario where you see, I've heard where they'll have like common small draws, like a penny or like 10 cents routinely to test out the financials to make sure, hey, we were able to steal this money, and typically banks or like financial professionals won't catch it.
I think it's bigger. I think it's one and done, get in and out.
Oh, really?
Absolutely. But here's the thing, we don't know how long that they may have had malware in their system and waiting and watching.
Yeah.
Maybe they know, hey, tax time, they're gonna get a refund. Those funds come in, we're gonna wait till that big deposit, and if they have the ability to see that, we're gonna take it.
Yeah, I mean, it's kind of the wild, wild west, I think. You think about AI, what was AI 5 years ago, and how fast moving everything is. Do you see anybody from a fraud standpoint, like a common fraudulent actor, if you were to say, hey, whether it be a different country or a source, it's probably difficult to define.
We've seen from all over the place. The interesting thing is, so there's law firms who specialize in this. You can hire them. Typically, your insurance company is going to hire them to negotiate on your behalf in a ransomware incident or something. And I sat in on one of these, and the attorney from our client's firm answered the phone and goes, hello, and the hacker knew her and called her, I'll spare her, but called her by name. And she goes, hey, how are you? And called him by name. And they knew each other from doing so many transactions. And these are sharp, professional, strange word to use, organizations that have call centers set up, and they'll work with you, and they want to help you get them paid. It's a very strange world, and it almost doesn't seem real in many ways, but that's who you're dealing with. And I think without having a law firm ready to go and a forensics firm ready to go, and obviously the FBI gets involved and ready to go, I think dealing with it alone is worth the price of an insurance policy all by itself.
Just to offset that variable, walk through a typical claims process. If someone was affected by a malware or like a fraud circumstance, what would be the typical process?
Yeah, so usually what we'll see is obviously somebody panicked and call us and say something seems wrong. It used to be where this would be 2 or 3 weeks after it happened. Now it's starting to be a day, and they're thinking about it more. You asked earlier about things that can go wrong too, exclusions. One that we were talking about is a callback provision. So not all insurance policies have this, and you can get them removed by calling the underwriter and saying, hey, please remove this, and they don't charge you for it. But many people don't, and a callback provision means if you change a bank account number, change who you're paying to without calling that person back on a trusted line, then coverage is void. So on a claim like that, I mean, that's a challenge where we have a claims advocacy team that'll work through it and try to find a resolution. But without that stuff.
So do you ever come across circumstances where, let's say that were to happen, it's like, please call me, we'll walk through this process, where they're like, oh, we got this, we're okay? Is that ever a variable you're challenged with?
No, we certainly, most of our clients have cyber insurance, and most of my not clients have cyber insurance too. It's very common now. But we do have some where we have the conversation. They say that's a risk we want to keep on our balance sheet, right? And they're comfortable with it. They don't see it as a risk to them, and it's not worth the exchange. And truthfully, that's okay. That's a business owner's decision as long as they understand what the trade-off is. What scares me is when I'm talking to somebody and they say, I have cyber insurance, and it's a little add-on built into the package policy for a few $100s, and they have full confidence they're covered. And that's wrong, right?
Yeah, I think that's a really good point. What would be some things you would say, because typically I'm covered and you're reaching out, it's like, hey, well, let's talk about your cyber, what comes into play with this. Is there a typical audit you would do outside of that software?
Yeah, I mean, obviously software is a big piece of it. I think there's so much more than just an audit. Insurance has been seen as this like, audit the policies and then quote them, and it's all the same. And some things are the same, right? You have a $1 million general liability, $1 million general liability, mostly the same terms. But there's so many things that are different, and most important is the process and how you get there. And I truly believe, and my clients would say the same, is the process we take, which is a proprietary process to get to the end result, identify risks, figure out how we can transfer them without paying any money, figure out how we can mitigate them. And then through 6 or 7 steps, we finally get to the point where we take it to the open market and have the marketplace compete.
And I'm sure the providers give you more advantageous recommendations, I'm sure, when you have the thorough process.
Yeah. I mean, we go and meet with any of our underwriters, and they're thrilled. They know we remove all possible risk, and so they're willing to put more endorsements, higher limits, lower premiums, and take on even risks that are they call it outside their appetite, right?
Yeah.
They'll take those on because they're like, we know they went through your process. We get it, so they're the best possible risk. Let's take this thing on.
You went through a due diligence, and I know from my standpoint, when I present to my underwriters, they're like, oh, this couldn't be written better for me. So they just know everything's structured appropriately.
Yeah.
From a banking standpoint, how do you typically view that if there's like a potential cyber risk? When do you identify that?
Customer's going to call. Right? The customer calls with it, and that's where you got to be quick. We had a conversation where the bank has to improve its process too, which gives us the opportunity to try to claw those funds back. ACH, right? We have a couple days of settlement between banks, so that's time frame. We can move quick to recall that back. One of the things that I think is important is process. We talk about dual authentication, but also who has the ability to do things. So one of the issues that we had was we had owners that had the ability to had access to their deposit account, they had access to their line of credit, and they had access to a wire module. And what happened was they transferred all the money off of the line of credit and they moved it out on a wire. In a conversation with our fraud investigator, I asked her, was this common? Not in commercial. And what kind of surprised me is she said heavy in the retail.
Interesting.
Which means people are using their home equity lines of credit are getting completely wiped out, moved into their deposits, and it's gone.
That was my next question. If it goes back in the personal equity once you get into a personally owned business.
So you got to be cognizant of what all your systems are connected, what access you have, and maybe you think, do we want to have this person to have access to everything? So go through and check your controls on what access you want per person on an annual basis to make sure, maybe somebody that left the company still has access to your checking account, right? That's a posed risk. So I would say it's important to make sure that you have a good process in place because, again, money moves quick and it's hard to track down and we have a very tight time frame.
I want both of your guys' perspective on this as far as the percentage of companies that are like all in, hey, we have a tried and true process for cyber. You're like, you're great. I can't improve this at all. What percent would you say meet that metric versus ones that are too stubborn? Hey, we have cyber insurance, we're good. I just want to look at it from both of your perspectives.
I can't improve this at all. I mean, there's very few. But even the ones at the top, or even where I'd say I can improve this, even if they think I can't, it's typically because they've researched it so heavily and they've invested and they're looking out for their company and they're good we're there and they feel that way, and I still think that's okay.
Yeah.
But the vast majority have so much going on, from banking to all these vendors, which I'm one of a million of, right?
Yeah.
To employee issues. Cyber can fall on the back burner. I think bare minimum, you go through a thoughtful exercise on your cyber insurance, which has resources and tools they can give you without cost that will help you become a best-in-class risk. Look at business continuity. If we were to go down, what order of operations do we set back up in, and how do we do that? Because in the middle of a cyber incident or any other incident, quite frankly, departments are fighting over who gets up first. And taken out of that fight or flight instinct, there's a real rational reason behind who gets up first, right? And so you want to take that out and think about that in a silo. I think that's a great exercise for every business. Few mid-market ones are doing it. Enterprise should be, and most are. But those are a couple things. There's, I mean, all of us can improve, right? Even the thing we're best at in the world, we can get better at.
I think it's always helpful to have a continued, every year you should do an audit of your processes, because there's risk in business at all times.
Just to piggyback about your business continuity plan, right? So if you get a hacker get into your system, it's like, oh, it's in the computer.
Right.
I can't get into it. So that's why somebody made the suggestion you should have it printed. Right?
Yes.
So it's in a drawer, and you can, how are we going to call, who are we going to call to do it, right? So again, you have to think, oh, I'm going to have access to the computer. Well, maybe not, depending on how you got hacked.
That's a great point.
I like to joke, a colleague of mine, he has binders, physical copies of all of his client interactions. It's an accordion, and he's been in the business for 30 years.
That's fun.
He's like, I got to dig through my filing cabinet on the Teams call. So pros and cons, of course, but I think it's important to have something off the computer in case you never know. Mm-hmm. So
I'll say too, and probably going overboard here, or maybe not. We were on a call with another cyber hacker, different than I was talking about earlier, and the negotiator, I can't remember the exact figure. I think they were looking for like 500,000 in Bitcoin to unlock the systems and give everything back. Negotiator was talking to him. He's like, yes, I've got you 250. I'll wire it over now. And the guy goes, no, I have your insurance policy. It covers 500,000. He goes, I see, it's in this drive. It's right here. And was pointing to it. I was like, maybe we don't keep that on your desktop.
That's wild.
Yeah.
They know your business, and they're so well tuned to that too. Would you say
Yeah. I mean, they're good and they're sophisticated, and they see this as a business. This is their business, and they're latching onto AI like everybody else is. And we're seeing they'll steal voices. It sounds like somebody, so you follow the callback provision. You get somebody, and maybe it sounds and it acts like them, or maybe it's a video and it looks like them, but it's not them.
I guess a question for everyone listening: who's gotten those text messages that say hello or just wanting a response? Hey, can we grab dinner tonight or whatever? Have you ever gotten those?
Click this link.
Yeah, pretty much.
Or the newest one is, oh, you haven't paid your Michigan toll road.
Oh yeah, I get those too.
You don't have a toll road.
Yeah.
It's a wild world we're living in, and you look at some of the older, my poor parents. Hey, Peter called me, and like, who's Peter? I don't know. He wanted to get dinner. Like, do you know him? My mom was 68. She thought that was like a real person that I was friends with, and I'm like,
they become friendly, right? Right? They get friendly, and then they build trust, and that's an easy way to. That's how fraudsters work, right? Oh, they're friendly. Oh, okay, and they'll give you'll give them their information.
Yeah, I mean, this is really good stuff. I think it's really good to talk about. Like, everyone knows of the cyber risk in the marketplace. And I think there's a lot of variables within a policy that perhaps some companies don't know.
Yeah.
And I think it's important to have more of a thorough process to take the proper risk protocols and bring in people who know what they're talking about, just to at least do an audit, because, hey, you may think you have good processes, but the risk continues to change on a real-time basis.
100%.
How can we help you, or is there anything you want to give the listeners to think about?
Yeah, thanks for having me on. This is cool. I think the biggest thing is consider the process you go through, whether it be your cyber or property or auto or liability insurance, and if that leaves you with comfort that your story is being told and that your balance sheet is either protected or absorbing the risk you want it to. Because again, both are okay. I took on a new client recently, and they had $5,000 deductibles, and we explored what $1 million deductibles across the board would look like. And that ended up being a much better option for them. But they had never explored it before. Now, that's not every company, but having the options and choice and control over how you handle your business, I think is of the utmost importance.
Yeah, I echo that comment. And Brad, thank you for joining this episode. I think it's a value add. I know you do a lot of the editing, so it's nice to bring in your expertise.
Absolutely, glad to be here.
Anything that you think from a banker standpoint in the realm of fraud, because obviously the financial piece is so critical to any business operations.
Yeah, I think any business of any size needs to think about it. If you don't have it, like he said, is you have to make sure you have something in place, or you just going to be willing to take that risk, right? Have a process. Understand, hey, email comes from a customer, email comes from the owner, that your person has a call back, even to your internal process. And just make sure you have a balance of controls of who can do what. Money can go so quick. If a hacker gets it, that's how you kind of have to think. If a hacker gets into my system, how are we exposed? How can they move money around in order to get it out? So if you don't have a policy, think about one. If not, you need to focus on your internal controls and make sure that they're robust, and you have to take and digest that I'm willing to take that risk.
I think that's a realistic perspective, because if this were to happen, what are your processes? Oh wait, that just happened, and that's the rule of risk, Murphy's Law. And given all the variables the market has of major companies' processes being affected, the likelihood is high. So I think that's all I have in closing. Thank you everyone for joining.